Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room. We're about to trade the US Open fully live and interactive. Just before we begin, if you don't mind, just to explain a little bit about what we do for traders. If you are genuinely interested in learning how to trade these financial markets from a position, I suppose, of awareness, knowledge and understanding, then we can certainly help you as an organization. So we spend an awful lot of time looking for these opportunities, explaining why markets move the way that they do, and it allows our traders to be prepared for those moves in advance, which is obviously quite useful as far as trade selection, direction, entries, exits, stop losses, risk management, of course, and the psychology of these markets as well. All formulate, I suppose, a trader's toolkit, and we can help you with that process. We've got a range of products and services, all available at very, very low cost, depending on whether you're a day trader or you want to trade bigger time frames. We have traders who trade daily time frames, for example, so there's a little bit less volatility and they've got a little bit more time to make the decisions that they wish to make. So a wealth of products and services available for you, all at thelivetraderoom.com. So go over there and feel free to use the chat function. And if you have any questions or you want to speak to one of our traders, then we can sort that out for you. Okay, so let's get straight into it then. We're looking for high probability trading opportunities across some of the world's largest markets, from your foreign exchange markets, the commodities, and also the global indices as well. So we've got this multi-asset class, multi-time frame approach to these markets. Yes, we are technical traders, so we technically get in and out of these markets, but we also want to be mindful of the fundamentals and the sentiment behind these moves as well. Okay, hopefully you've had an opportunity to have a look at our risk warning currently up on screen. First thing we do every time is, of course, just review the market moving news. So today now is Tuesday, the 11th of May. We don't really have a huge amount to deal with, as you can see. We're looking at for the red, for the major news events. We've got the governor of the BOE, which is participating in a panel discussion about secured overnight financing rates and term rates and loan market developments. So what's interesting about this is that there's audience questions expected. Janet Yellen got caught last Tuesday, I think it was, where she was commenting on interest rates, and she was suggesting that, of course, the Fed will be increasing rates. It's a bit of a no-brainer conclusion, really, but the markets got really panicked and freaked out by it. So we saw a lot of volatility to the downside. We saw a few days of upsurge, and now we're looking like we're getting the real move to the downside from this inflation perspective. So that's really the major news for the day. So nothing of any major concern. The big macro events, of course, are completely dominating the scene, and we've been talking about it for all year, really. But it's the inflation story. It's the true impact of prices increasing due to the pandemic, the large amount of stimulus that's in the system, the fact that there's a large cohort which have been saving all year and ready to start spending. So there's this growth story which is likely to tick to the upside, but as a result, with increased demand, reduced supply, you're going to get prices pushing higher. The Fed are telling us that's not really the case in real terms. We'll wait and see. The bond market supports that view as things currently stand, still at 1.6, a little bit of an uptick since yesterday, but nothing of any major concern. So the bond markets for now are very much supportive of the Fed, because if the bond markets perceive inflation to be a concern, we see yields move higher, probably quite aggressively. On this note, just while we're talking about this, it's worth noting that tomorrow at 6 p.m. we have a 10-year bond auction, the government selling debt, and a 30-year bond auction on Thursday. So it'll be interesting to see the demand for those bonds. We'll talk about it a little bit more tomorrow in tomorrow's trading session. Okay, so without further ado, we don't really have an awful lot in the pipeline as far as news is concerned, apart from the macro view of these markets, which is this inflation story seems to be kicking in. But the question is, what can we do about it? And that is a little bit of a tough one, because we are seeing markets which are counterintuitive at the moment. And I suppose the easiest way to kind of explain that is that we're in a risk-off market condition. So prices are absolutely rolling over to the downside. So because we're in a risk-off, we would expect capital to be coming out of your indices markets and moving into your safe havens. That's the normal correlation that we see for the vast majority of the time. So equities sell off like you're seeing across the board. Even the Dow Jones is having a bit of weakness off these highs. The FTSE's taking a bit of a strong move to the downside. The DAX has gapped lower and continued its move down to these monthly lows. And same situation for the Nikkei. Just briefly on Bitcoin, it's just sitting around that $55,000 level. So we can firmly say that we have risk-off market conditions. The question now becomes, okay, if capital is coming out of equities, where is it going? We'd normally see it be put to work somewhere. So is the gold market the destination of choice if you look at it on the daily time frame? You can say marginally yes, but we've had very significant moves in the indices markets, momentum based moves, and we've not really seen the same as far as gold is concerned. So it's not really going into gold. So okay, is it going into the yen? You can see that the yen is weakening against the euro and the pound, so it's not going into the yen. So then we're left with markets like the Swiss franc. Is it going into the Swiss franc? The answer is no. And then we look at the dollar. Is it going into the dollar? The answer is also no, as things currently stand. So we've got this strange market condition now where the correlations are not stacking up as we would normally expect. So that makes it actually quite a difficult market condition right now. We're getting retracements on yesterday's selling. So we're in this, apart from the equities pushing lower, we're in this kind of consolidation mode across many of the other markets. Even this low in here, which we were talking about yesterday, it looks like this market is unwinding, and if that does happen and we get a flush to the downside, then that's a very viable trade to the downside. The euro yen is threatening to push higher, but it's kind of failing. So we are left with this unusual market condition as a result. There's a few markets that would be quite interesting, like the gold market to the upside. The gold market is often used as a hedge to inflation. So if inflation pushes higher, you often see the price of gold start to tick to the upside. And it's really the movement of capital from equities to more stable safe havens like the gold market. So we can expect further upside there, perhaps. Crude oil, we've got this issue with the pipeline, the hack in the US, and there is a restriction of supply which should be online apparently towards the end of this week. But what we've seen is normally if there's a restriction in supply, you'd see prices push higher. We're actually seeing the opposite. So there's a few things in this market that are just creating a really big question mark for us. And that's the problem. So this is what we're going to keep an eye out for today. So we'll have a look at our trade plan from yesterday. So we're actually getting a much weaker dollar. That's the pound yen. The S&P is continuing its move, so too is the Nasdaq. So looking for a high probability sell trade below 13,666, and we're comfortably below that now, in around the 13,174 level. So a really strong move lower. So this session, it may be a case of either choosing the equity markets to the downside or the dollar weakness trade. And that's a tough decision to make. If you take one of each, you're kind of hedging one against the other. What we want to see happen is normally the equity markets push lower and the dollar to strengthen, but we're just not seeing that as an opportunity. So what I'll do with the pound yen here, we'd expect further upside, but we're really not getting that either. We'll switch between. We're just watching this market closely, just to see if we get that bit of rollover price action. So we got this little significant double bottom, but our prices beginning to roll off their highs. So yesterday we were looking for further continuation to the downside. Now we're looking for, strong continuation trade to the upside. So let's look at it at the smaller term time frames. We'll create our trade plan. So this one's quite straightforward in terms of this market is pretty much in a sideways moving pattern. So prices are, broadly speaking, they're moving in this direction. So a breakout above the 21.77 would expect further upside action in the euro dollar. So the markets are so choppy at the moment. They're literally there's swings from day to day, which obviously makes trading a lot more difficult. Sorry, it's 21.77. Okay, so let's take this off the screen. So we can keep an eye on the euro dollar. The Aussie dollar's kind of in a similar boat. We'd expect further upside. It really does depend on how much conviction we have to see further upside in this market. So we're now looking at a high probability breakout trade. Breakout buy trade. Above 78.53. 78.53. We'll go and put that in place. It can certainly give us an opportunity to the upside. So New Zealand dollar, we're kind of in consolidation really, which makes it a little bit more difficult. Right, we don't really like the New Zealand dollar at all. So we can keep an eye on the euro pound to the downside. See if we get that rollover trade lower. Let's see what's going on with this yen. Are we beginning to see some capital creep into the yen perhaps? This would be a trade that would be in keeping with the equity markets rolling over to the downside. We would expect to see some cash coming into markets like the yen trades. So I'm looking at the Nasdaq market just off screen as well. So we can see that there's a strong series of resistance levels in at these lows. For the S&P 500, so quite odd market conditions in these markets at the moment. The equities are selling off, but so too is the US dollar. So we're not seeing a beneficiary of
Comments coming through from EU Dombrowski that China trade deals dependent on wider relations with the EU.
We'll put gold up here. So this is our trading session currently up on screen. Like I said, we've got a series of counterintuitive moves. So what we mean by that is we're in a risk-off market condition where the markets are selling off to the downside. And what we would expect is for capital to come out of your equity markets and into your safe havens like your dollar and the yen and the gold market. And so far that's not been the case. And that's what makes us just pause, just take a brief, sort of try to be a little bit patient really with these markets. The last thing we want to get is caught up in a lot of sort of choppy, erratic market conditions. So we can see which trade wins out. The equity markets look like they're threatening to push lower. So that very well may be the focus of the session. We've done nothing but kind of move sideways so far since the European Open. So we're looking for the S&P lower below that 49 level. The Nasdaq below it's the 13147 now. The pound yen below that 153.36. We like the euro dollar to the upside above the 121.77. The New Zealand dollar above that 68.53 level, and lastly gold market, that inflation hedge trade to the upside, but it would need to be above the 1844. So that's our trade plan there up on screen. We've got some cash coming in about 7 or 8 minutes. So
Some crypto news here as TL-backed Block.one injecting $10 billion in crypto exchange. Again, just repeat that, the crypto space reports that TL-backed Block.one has injected $10 billion in crypto exchange.
Okay, so we're just getting this little move to the downside again, just as these indices markets are beginning to open up. So where does that leave us? Further downside moves really below that 41.50 level.
Following that story there in the crypto space, micro Bitcoin futures surpassing 100,000 contracts traded.
So we still have this contradiction in these markets from the dollar weakening across the board and the equity markets weakening. Normally they're negatively correlated. We're not seeing that today, which is a reason for caution or perhaps or a bit of a pause, but there is an opportunity to the downside for these US indices markets as things currently stand. They're just quite bearish, so it's really trades that wouldn't be supported by the normal correlations, which is obviously not a great market condition to be trading, but okay. still more sort of volatilities creeping into the dollar weakness trade, and also the potentially the dollar strength, the US indices strength trade, weakness trade. Sorry, excuse me. So US indices to the downside, and the dollar also to the downside. Is the correlation, which is counterintuitive. Just so that you know, normally we have the correlation where if the equities push higher, the dollar sells off. If the equities push lower, the dollar strengthens, and we're not seeing that correlation now. So it's just market conditions that we're not ultimately that comfortable in. So there we go, we're getting that tick higher in the Aussie dollar, and the gold market is also pushing higher. So if the indices markets are selling off as a result of implied as a result of the inflation story, then the gold market is probably the market that makes the most sense, with the equities pushing lower. So it's just we're not really seeing that volatile move in gold to any great extent. We're just sort of in this little sideways pattern. So not great. Let me get rid of one-click trading. So you'd expect this market to be quite explosive, and it's not. It's just drifting sideways. And we keep an eye on as well the 10-year bond, and it's just flatlining around the 160 level. So there's no action there either. So just a strange market condition at the moment. But they're the markets we're looking at. Those are the levels at which we're looking to trade. Very close to that 4150 level to the downside for the S&P, and we are technically breaking these levels to the downside as far as the Nasdaq's concerned.
Just turning to the Fed here and looking closer towards Biden's coming questioning on whether to re-nominate Powell as Fed chair early next year. Politico with a bit of a comment from a senior White House official believing Powell's done a good job of aiding the economy and supporting the markets, with one senior Democrat close to the White House saying Powell should not be underestimated. As well, just that senior White House official noting that they say Biden's not yet close to settling on another term for the Republican Powell, decision that could come up by late summer or early autumn.
Okay, so we'll get into this Nasdaq trade to the downside. Okay, so we've just got in to the trade in the Nasdaq to the downside. Seems to be a lot more downside pressure on the US index markets. So let's see if we get that continuation move now. But like I said, it is a trade that we are that we're getting into, we're sort of engaging with, but there is a backdrop which is a bit indecisive. We're getting conflicting information to make this trading decision, but we're going to just go with the momentum, go with the commitment of others, which is clearly to the downside for the index markets, and we'll see what opportunities lie ahead. The Nasdaq or the S&P to the downside are both viable trades. So look, I do apologize, but we do have to move over to our other trading room. So if you can, really the focus really is just going to be on the index markets further to the downside. So we've got this little breakout, this little handle just sitting in here on both of these trades. So we'd expect further downside. So let's see now if we get that follow through. So look, thank you very much for joining us as always. Do take care, give us a thumbs up, subscribe to the channel if you can. And you'll be notified when we do go live with further trading sessions, and we've got a wealth of videos as well that will be coming online pretty shortly. So for everyone here at the live trade room, thanks for joining us. Take care. We'll be back again tomorrow at 12 noon. Bye for now.